Hey everybody, laws and regulations then. And what we're talking about here is the company complying to laws and regulations, the company following laws and regulations. Now, first thing I want you to get clear in your head is the management. It's the management's job to prevent, that's what that's supposed to say, and detect any non-compliance. So it's the management's job to make sure that they do comply. Okay, it's not the auditor's job to try and find non-compliance, it's the manager's job. So what is the auditor's job? Okay, now they've got to worry about a couple of things to begin with. They've got to worry about, first of all, is this non-compliance, this not following the rules, will it have a direct or an indirect effect on the financial statements? And you've got to do things differently depending. So if it's a direct one, such as, I don't know, payroll and tax, okay? So because if the company gets the payroll wrong or the tax wrong, then the accounts are going to be wrong because the tax is going to be shown differently, or the wages are going to be shown incorrectly, aren't they? All right, so what you've got to do there is get S&A, sufficient and appropriate evidence of compliance. Make sure that they've done it right. Get reasonable assurance. How do you get reasonable assurance? By getting sufficient and appropriate evidence. Cool. What about if it's indirect then? Well, let me give you an example of an indirect. Could be environmental laws. Could be terms of a lease. And if you get that wrong, if they don't follow the operation lease rules or they don't follow the environmental rules, then they might have to pay a fine. And that fine ends up going in the accounts, so it will affect the accounts indirectly. Okay, so it's something that goes wrong and then they have to put a fine in generally. So it has an indirect effect on the accounts. Direct ones, you get it wrong, directly affects your accounts. Okay, so environmental laws and you get a fine for not following them. So indirectly, it will affect you. Okay, so what do we need here then? Not sufficient and appropriate evidence. What we need to do here is we need to create specific procedures to identify the non-compliance. Okay, so what sort of specific procedures are we talking about? Well, that could be things like substantive tests. It could be reading the board minutes. It could be ask management and the lawyers. Have you had any claims to do with non-compliance? That sort of thing. Now, what you've got to realise is, if we're going to do all of this, then all of this means that we're going to need some professional scepticism. Okay, because you've got to read the board minutes thinking, I know they told me they'd comply, but let me just check. Let me not quite believe them. Let me have some professional scepticism. But how are you going to know they comply? Well, you're going to need a general understanding. That's all. It's not your job to prevent and detect, but you need to have professional scepticism. You need to think, are you sure you're right? So you need to have a general understanding of the legal and regulatory framework that they work within. So if it's a bank, you need to have a general understanding of the banking framework. Okay, that's the screen that you need to remember well. Now, there is another bit, reporting or responding is what I'll call it, responding to non-compliance. So if you find some non-compliance, whether it be on purpose or not on purpose, if you find some non-compliance, whether it be direct or indirect, what do you do? Okay, well, I don't really have enough room, so I'm going to bring myself and get a bit more room here. So what do I do? How do I respond to finding non-compliance? Well, firstly, step one, I will tell those charged with governance. All that means, those charged with governance, is people who need to make sure the company is being run properly. Generally, that's the directors, isn't it? That's the management, okay? So you would tell them, you say, look, I found this non-compliance. Did you know about it? Now, it might be that they're not complying on purpose, okay? So we found this non-compliance and they're doing it on purpose. They're doing it illegally. So we're not going to tell them. We're going to tell the audit committee. But what if there's no audit committee? Well, we'll have to get some legal advice on what we do here, okay? If it's all okay though, and they say, yeah, it was just a mistake, sorry about that, we missed that, what do we have to do? We have to think about what our response is. So we would just say, right, okay, then what I've got to do is, if it's a material misstatement, then I've got to think of the effect on the audit report. Now, if they say, yeah, it's fine, we'll put it right, we'll change it, great, no effect on the audit report. If they disagree and they won't change it, then we'll have to change our audit report to a not so positive one, let's say. Okay, but I don't want to get into audit reporting just yet. So that's it. That's laws and regulations. So make sure you know how to respond to non-compliance. Make sure you know that it's the management's job only to prevent and detect. We've just got to get sufficient and appropriate evidence if it has a direct effect. We've got to do some specific procedures if there's a possible indirect effect. And we need to get those specific procedures, we need to be a bit more professionally sceptical and we need to have a general understanding. Okay? Learn that well and you'll do fine in a question.